Okay, uh, this is Dow Gold Video Theory, video number 2. Uh, Let me click on, get the slideshow going here, play from start. Title of this one's called Calculating the Exact High Price of Gold. It's a bold title, just trying to be an eye catcher. Here's the outline for this video number 2 in this series. Um, I'm going to do a recap of video 1, and then I'm going to show how I came up with 6295. And here's the details. That's really just for me to follow that, but pause and read that if you want to. So here's the video 1 recap, and I encourage you to go watch video 1. But this is the Dow priced in gold. It's a schematic of a chart, and the chart, that's what the chart actually looks like. And the improvements I made in this video, thanks for the suggestions, were I got some suggestions, was to make this cursor really big, and it was also to make the text bigger. And the improvement I also made was I made these lines, which is these lines represent the Dow gold ratio, or the Dow priced in gold, and these data points right here with the text represent that single point, and this is just the chart right here on average. And this shows you the pattern, and the pattern that you want to see is that the Dow goes up and it returns. Basically, let's consider this Dow gold equals 1. So periodically, the theory I've always heard was that the Dow gold periodically returns to 1. Well, actually, it's some other numbers, and I'll talk about that later. I mean, this is like 1.8, 1.4, 0.62. I calculated where it was going to. So this pattern, I haven't heard anybody talk about it, so that's why I'm making videos about it. And this is what I go by. And the pattern told me to switch from being in the Dow, and it didn't catch the whole thing. I mean, the low in the Dow was September. It was 2008, but in 2011, this thing says, "Hey, be in stocks," and then right here, let's switch into gold or gold mining. And so watch the first video, and it explains that. And like I said, if you have any suggestions, I'll try to incorporate them in. Thanks for the suggestion to make the text bigger and to make the cursor bigger. So those are great suggestions. And we're still on the recap, but this is the conclusion I came to, and this is just a base case. $1,000, put it under the mattress. It's going to be in February of 1915, and in September 2018, it's going to be 1,000. That's what I'm talking about here. It's just a base case. Now, if you're all in on gold, 78,000, which is not a good investment, but if you think of gold as money, which it was at one time, that's 78 times better than the dollar. Okay, the Dow. So the Dow, if you just went all in on the Dow, $1,000, you end up with $378,000, which that's 5 times better than gold. But if you do this and switched every time, this is what video 1's about, you ended up with $10.6 trillion. So that's way, way, way better. And the only purpose of all that is to show you the power of switching and not just buying not just being a perma Dow bull, and to pick a name, what's that guy's name? Jim Cramer. Those guys get paid. Uh, they're not really making their money on their investments. I think they're just getting paid a salary. And, a perma gold bull would be like, or a gold bug, as you want to call it, will be Peter Schiff. I mean, Peter Schiff, I think he started a gold company somewhere down in here. What if he started his gold company right here? Is he going to tell you to buy stocks? No, he sees this as one long trend down, and fundamentally, he's always right. I've read his books; he's sharp. But always being right doesn't always mean that you're going to make your clients the most money. It just means you're always right, and he is. He's always right. And I don't know about Jim Cramer. I would never buy one of his books, but I would rather listen to his advice in this time period. So that could be a future video. That's just a screenshot of the actual chart. Uh, Watch the first video. It's macro trends. You can go find it and play around with it. That's just a shot of the chart again showing the second pattern. Here's the third pattern, and the first one's buried in here. So you gotta move these little things. It's all in the first video. You can move those little handles and zoom in on it. Now we're to what this video is about. How I came up with the price of 6295. Okay, so this is determined based on the price of gold exclusively, nothing else. There's no Dow and gold or anything like that, or the stock market. It's just gold. Past behavior of gold predicts future behavior. And what the black part is this chart from Fred, and I just eyeballed this and I said, well, you know what? Let's just call that 350. You're not going to get in at the exact bottom, which is down here somewhere. You're not going to, so that's kind of an average price that gold went up and down historically over. Just one I picked. I just picked 150. Okay, then it goes up to 650. And then it comes down again, and then this is kind of arbitrary, but I just picked a line there. I mean, I'm not going to get in exactly here. It's just kind of where half of it's above and half of it's below after it made its big drop. And so I came up with 350. You could come up with something else, but this is the objective part of it. I consider these objective facts. And then from this platform, it launches up to 1650, and then it comes back down and settles about 1225. So this picture right here, this whole thing is the problem statement. I like to do things in problem statements. And it's like, okay, first move was that, second move was that, then the question is, what's the third move? How can I figure that out? I do that first, and then I figure it out. And this is the math. I'm not going to get into the math. I'll let you do that. I'll just explain it. Objective fact. First two lines are objective facts. Okay. Gold went from 150 to 650. It's a 333% increase. Then later it went from 350 to 1650. And that's 371% increase. And then I can take these two numbers and I can extrapolate out a third. And when I calculate that third one and apply it to this number here, which is the platform for which it jumps up to the next level, I get 6295. And likewise, I can get the number at where it's going to settle at. Recall, these are settling numbers. Gold goes up. Here's the behavior. It goes up to a high, comes down and settles. Goes up to a high, come down and settles. And then knowing that information, I can calculate what it's going to do in the future. Or that if gun to my head, if I were to calculate that, this is my best guess. 62.95, 53.90. I know a lot of people say 12,000 or 20,000, but they don't show how they get it. So it's not good enough for me. I mean, I would go in on gold a little bit based on something that Peter Schiff says or some other guy says. Just now's the time for gold, but it's not good enough to put a large chunk of money into something that somebody's saying, and they also happen to be selling gold or being in that business. Here, it's just a link. I'm going to go to the live chart and show you where I got the data. I don't know what the difference between these two are, but so I just picked that one. And this little handle right here, or you can pick max up here, either one. And let's see if I can get it to work. Well, come on now. I'll just pick max. Okay, so there's the gold chart that you know. It doesn't look exactly like my chart. In fact, if I go up here, and let's see, that is kind of awkward. Come on. Let's see if I go down here. Maybe it'll find the exact high. There. Notice it's coming up with 1813, and there's a lot of peaks in there. Well, here's what I did. I said, well, I'm not going to get out of exactly the exact high. And plus, I don't want a lot of this detail in here. And so I go here. Here's how I get to that. And it's set on daily. And so on daily values, it did get up above 1800. But if you do it, this is what I use. I smooth the data out, and it only gets up to like 1650. And it's easier to draw a line through the averages when you're looking at that, because I'm not wanting to get in details with this thing. And if you'll notice, I just noticed something. This could be a subject of another video, though. Let's see if it'll go back to daily. I clicked on it. There it goes. This is the financial crisis. Look at that. That's what gold, to me, gold didn't think much. It shrugged it off like it was nothing. There's the entire, this portion in gray, that's 2008. And then there at the bottom is what? If I can catch it. Well, I can make it easier if I do this. So that's how you use this. Okay, so there's the financial crisis. And, gold hit. There's March 2008, and here's the bottom of it. Well, it's still hard to hit. Come on. 2008. So I think a lot of people are afraid of this, but there's a big difference between this right here, when gold was at its all-time high, and then if you look at, if you're standing right there and looking out this way, you're at the highest gold has ever been. And if you're in here somewhere and you're looking back, you're at the new low for gold. So that's what's different about this crisis versus last crisis. Again, subject of a whole nother video. I'm getting a little bit distracted here. I'm trying to keep these things under 20 minutes. I can close that now. That's enough on that. And now the thing's locked, screen's locked up. Let's see if I can get it going. Okay, I had to do that. And I'm going back to play from current slide, and here we go. I wanted to pause and talk about the purpose of the videos. The main one, this is like if you use Pareto's rule, 80-90%, these videos are just my own, to describe my own selfish intent for these videos. I just want to think more clearly, and by putting these videos together, I've discovered that it helps me think more clearly, and that's the main thing. Now, do I need to stand up and give a speech in front of a big crowd of people like some? I don't ever do that. So, but I will get better at communicating by doing these things. And I make these videos. I've been making them for myself, and I just recently started sharing them, and they are really helpful at getting your thoughts together and putting you on the spot, and you have to talk through them. So you can read through the rest of these, like this one. Yeah, I'd like to. I happen to already be in, and I happen to be in mining stocks, and I'm not going to make these videos. I don't think about personal things. I'm going to try to make them about facts, and then what we can extrapolate the facts into. But this is also an attempt by me to get out at the best time. I could get out right now, but the question is, would I be getting in right now if I wasn't already in? Um, I think I want to stay in, and that these videos are helping me think more clearly about that. And I hope to develop an intuition about when to bail out. And when I bail out, I'm going to bail out of mining stocks and into actually physical gold. That's the subject of a future video. The mining stocks are like gold on steroids. Uh, so if you really think through all this and believe that what I'm saying, you might want to get into mining stocks. And I want to talk about what the purpose of these videos are not. It's not investment advice. I have no idea what you should do. And I'm not trying to pump up gold or mining stocks because I'm already in. And I'm obviously not trying to sell anything on YouTube. I'm not monetized. Maybe I will be later. I don't know. But I'm not now. And just look at my view count. What is it? Last time I looked, it was like 15 or something. So until I start getting some numbers like, oh gosh, there's one, the annoying orange. Look it up. 245 million views for the annoying orange. Amazing. So until my views get up that high, nobody can accuse me of trying to pump up gold or mining stocks because I'm already in. I'm trying to think this through. That's my main attempt. Okay, so that we're clear on that. And then I got some future video ideas. This one that I've circled is the next. It's got to be the next one because it's way back here. I've got 62.95 for where this thing's going to, and I came up with a date, and those numbers could change. I'm going to make more calculations and see if I get some confluence around these numbers. Now, how many times can I calculate this? This is just one way. That's where I'm at right now. But in the future, that might change. So, future video. And, I've already done this. Bigger text, bigger cursor. And I just figured out how to do this. This was on my to-do list of things to make the videos better, and I just figured out how I can pause the video. And after I get to about 10 videos, I might treat myself to Final Cut Pro. I'm using QuickTime. Anyway, that's all I've got. And if you have any suggestions or questions or comments, throw them in there, and I'll see you on the next video if you're following this. And I know not many are, but it's just the way it is. I'm not going to be the annoying orange. Thank you for watching, and until the next one.